Bob, thank you for coming on the show. I have a lot I want to chat with you today. But before I begin, can you give yourself just a brief description of who you are? And you're the founder of Barefoot Mining, so maybe a brief description of what you're doing at Barefoot.
Sure. Well, thank you, Aiden. A pleasure to be here today. Yeah, I'm for those of you watching, I'm an older member of the community. My Twitter handle reflects that, Boomer BTC. And as I said, I'm the founder of a company called Barefoot Mining. We've been in business since 2017, and our focus is on what I call horse class mining and also off-grid mining, or what I call wow mining, which for the most part means we focus on kind of small to medium-sized sites, and we largely produce our own power. And we have a variety of different sources. We do it with hydro, anaerobic digestion, and natural gas. My background prior to Bitcoin was primarily in the personal computer industry. I was the chief technical officer of a company called Gateway, which those of you who were around in the 90s and early 2000s, we were one of the largest personal computer companies in the world. And I spent that first 2/3 of my career really designing PCs and other pieces of electronics.
Okay, awesome. So I guess I just want to jump right into it. What is the current state of the Bitcoin mining industry today in terms of the last couple of months? We've been chopping around under 100,000. So I would imagine it's been difficult for miners with lower prices, just from a profitability
Yeah.
standpoint. So yeah, where are we kind of sitting today in the Bitcoin mining industry?
We're in a pretty rough patch right now, Aiden. My calculations, and it's hard to do this exactly, but my calculation is that across the entire industry, the average cost of production is in the high 80,000s, US
Okay.
dollar based. So as we woke up this morning, the price was right there. It was like
Yeah.
88,000 US dollars this morning, which means that um, and by the way, I'm talking about a fully burdened cost when I say that. So
Okay.
not just electricity, which is what a lot of people do, but you have the cost of depreciation of the equipment. If you're running a commercial operation, you have insurance, you have labor, you have all these other things that go into the equation. Now, it's true that generally you're going to see well over half of the cost be electricity, but the other parts are not insignificant. Now, some people, because that's the average, and when I say that I mean the mean, there are people that have been mining at 110, 120,000. Now, largely those are the large publicly traded companies, and there's a whole rat hole we could go down there. But the reason they can do that is they have big stacks of capital,
Yeah.
and they can wait it out. Now on the other end, my calculation, and we have some operations that are down here. I believe that fully burdened cost, like the cheapest you could do it, is around 50,000.
Wow.
So if you've got one of those operations, you're not loving current conditions, but you can make it. What we are seeing is we're seeing global hash rate really drop significantly for the first time since 2021, which was when the China mining ban happened, where we have sustained decreases in the hash rate. Now, by the way, that's good, and it's also bad, because what happens is when the hash rate drops. So one way to think about it is, let's say, just to keep the math simple. So if the global hash rate was 1 zettahash, which it's been in that range, and I happen to have 10 exahash, I would have 1% of the global hash rate.
Okay.
Okay. So if global hash rate dropped from 1 zettahash, which is 1,000 exahashes, to 900 exahashes by 10%, but I still had the 10 exahashes. Effectively, I have a bigger share of the overall market, right? So that's good. What's interesting though is the rate of block production slows. So like the block times, which are kind of programmed to be around 10 minutes, that's the way the protocol is established. When the hash rate drops, then the block time increases, and it takes a couple weeks to get back to that point, right? So it's because we've been in a continual negative adjustment for like 2.5 months. We're always the block production has been slow too, which hurts our revenue. Now
I
we'll
see.
eventually catch it up, but that's just a long-winded way of saying it's been very painful for pretty much everyone in the mining industry.
I can imagine. And then
Yeah.
some of those public companies that you're saying are mining for higher prices, are those some of the companies that might also be pointing compute at AI over the last year or so because it's more profitable for them?
Yeah, they definitely have. We've seen some of them allocate as much as 30% of their power budget, moving it from Bitcoin to AI. Now, I think, like I said, there's kind of a whole rat hole with the public mining companies, and I want to preface it by saying I'm not a fan. And the reason that I'm not a fan is I don't think there really is a great Bitcoin ethos within those public companies,
And
you know.
I think I've heard you talk about in the past, are they just hashers? They don't own the energy and aren't creating the blocks, the
Yeah,
block templates, I should say.
right. And maybe that's worth kind of defining. So really, what
Sure.
is mining? You know, so I think when people think of mining, they think of hashing commonly,
Yeah.
right? They think of the computer, but it's really bigger than that. So what mining is first you run a node. Second, you manage a mempool. So for those that are new, what that means is there's there's a whole set of unconfirmed transactions that have been sent. I could send Aiden some Bitcoin right now, but until it's in a block, it's considered unconfirmed. So there can be up to, I think the maximum is about 1.4 million. So there's actually in the protocol, like it'll actually start kicking out beyond that level. But so there's this whole mess of unconfirmed transactions in the pool. So the miners manage that mempool. They then create what's called the block template. So every time it's time to commence working on the next block, they create the template, which means they select from all the unconfirmed transactions, roughly 4,000 that can go into the next block. And they can use whatever criteria they wish for that. And that's part of why Bitcoin has censorship resistance, is each miner can choose what they wish. They also create what's called the Coinbase transaction, which is the transaction that pays them from the network if they win the block. And then they hash, right? Then they hash the block.
Okay.
Well, what's really happened over the course of the last several years is what we call miners have abdicated all of the responsibilities other than the hashing to the pools. And we're in a situation I don't particularly like, which is one where Antpool and Foundry control on the order of 2 of every 3 blocks. And which means those 2 companies create the templates for 2/3 of the blocks. And that doesn't put us in a great censorship resistant
And
position.
because that's in theory, they can decide which transactions are in the next block.
Yeah, not in theory, in practice.
Okay.
They do decide. Now, one thing we didn't mention in the intro is I'm also on the board of directors and an investor in a company called Ocean, which was created about 2.5 years ago, with the goal of better decentralizing the mining network, because this centralization force, of all the hash rate being directed to a small number of pools probably could have been predicted. That whenever, I think one thing to Bitcoin will always fight. While I would still say we are decentralized as a network on the whole, there's always going to be these trends towards centralization. You can look at it in different ways. One could be, the mining pool. One could be in custody. There are different
Totally.
forces that push, and whenever something is popular and powerful and valuable, there are going to be forces that want to centralize it.
Yep.
So we as a network and a community have to recognize those things and push back against it. And that's what Ocean is Ocean is saying, hey, we have to fight against this centralization of block template creation because it is essential to censorship resistance. If everything centralizes around in block template creation behind just 2, 3, 4 organizations, then it's very easy for regulators and bureaucrats to come in and say, well, we're gonna force you
They
to,
can pick and choose.
yeah, to be, and it's more likely that that would come in the form of whitelists and blacklists, right? Meaning like, hey, here's a list of addresses. If I am a government authority and I have some oversight over a pool, say, hey, if I see you include a transaction to any of these, let's say 2,000 addresses, you're in trouble. And that's what they do with a bank, right? A bank
Totally.
has that kind of issue, and people criticize Bitcoin because they say it is, the fodder of criminals and money launderers and all that. And they kind of use this against Bitcoin, saying, well, they could do that. And by the way, my response to that is it is not the role of a monetary system to be a police force, and it's not a judge and a jury.
Totally.
And so I'm not saying we shouldn't go after the bad guys, but there are different mechanisms, and it's not the role of a monetary system to um, to police them.
Totally. And then I guess that kind of ties in. I've heard you talk about in the past about how institutions and at some point nations will want to control block space, so they themselves can choose and have access, I guess, to blocks and transactions that can go forward and move and get into the next block. So how do you think that plays out, I guess, over the next, couple of years? Because we have started seeing, countries build strategic reserves. I think that'll expand going forward. How do you think the ownership of block space continues going forward and the importance for institutions and nations to have block space?
Yeah, it's a great question. It's something that I spend a lot of time thinking about. And my answer is probably one that some people won't like, but I think it's the reality. I think we have to back up a little bit. So to go
Sure.
through this, we have to set some groundwork. The first thing is, if we look forward X years, pick your time frame, and you are a Bitcoiner and you believe Bitcoin will be, at a minimum, a substantial alternative monetary system and a valuable asset,
Yep.
but maybe at its maximum, the global reserve asset and the base settlement layer for everything. But if you're anywhere between those two positions, then the logical next conclusion is, well, then every country and every financial institution is going to want to have some talons into that network. That's obvious, right? Because if they don't, if they don't have any mechanism that gives them some sort of priority access into that system, it's an existential threat to them.
Totally, because they might not be able to access in the monetary world.
Correct. Correct. And even if they have, we'll take the most basic case, you're a country and you have a strategic Bitcoin reserve. You have several thousand Bitcoin. Let's say you're a small country and you have several thousand Bitcoin. Your access to that Bitcoin, if it's completely predicated on the rest of the system behaving properly, well, you have an issue. Now, and when I say behaving properly, what I'm really getting at is, when will you get access and what will the cost of the access be?
Wow. Yeah, I've never really thought about that. If you have the Bitcoin but don't have the ability to move the Bitcoin, what is that Bitcoin to you?
You essentially don't have Bitcoin, right?
Yeah.
So, like, if you like it, the way I phrase it is, can you think of any service in your life where you know that you need it, but when you need it, the provider of that service cannot tell you how long it will take for the service to be performed and what it's going to cost?
Yeah, that makes things difficult.
Right? So, like, an example that I like to give is, if you and I, Aiden, we said, hey, we're gonna go to Las Vegas. You and I are gonna have a boys' trip to Vegas for the weekend. Okay. Now, you get on Expedia, Travelocity, whatever. You go in and you book your flight and you book your hotel room ahead of time. Okay. And let's say this is a month from now.
Sure.
So a month from now, you do that, right? So when you arrive in Vegas, you know where you're going to stay, how much it's going to cost, how long you're going to be there. You know what the price of the airfare was, all those sort of things. Me being a bit of a procrastinator, I just show up at the airport the day I'm supposed to meet you in Vegas. And I walk up to the airline counter and I say, I need a flight to Vegas. And so odds are the flight I want to take is not going to be available. I'm going to sit at the airport for hours waiting for my flight. And I'm probably going to pay an exorbitant fee for this to occur.
Yeah.
And then when I arrive in Vegas, same thing. I'm going to go to Caesar's Palace and Bally's and, just show up at the counter and say, hey, I want a room. Do you have a room? No, we don't have a room. or how much? Well, part of so Bitcoin has this weird sort of thing, because that's how, when we want Bitcoin transactions, that's how it works. Okay. Now, the beauty of it, there's two sides to this. The beauty of it is that as individuals, it's very powerful, because you and I, Aiden, with everybody else in the world, if we want to do a Bitcoin transaction, we essentially bid in real time for this to occur. Okay. And it's very powerful. And it's very, quote unquote, fair. I would say fair, right?
Yeah.
Kind of, in a way. However, if you are a corporation and you're trying to operate on a Bitcoin standard, you want to pay your suppliers, you want to take orders, you want to make payroll, you want to do these sorts of things. Does this system work for you? Probably not, right?
No.
And so If you so if so so you need so what I would say is a fundamental element of hyper Bitcoinization is for there to be a mechanism by which corporations and people that heavily use the network to have some degree of predictability in both cost and response time.
Makes sense.
If not, then I don't think Bitcoin hyper Bitcoinizes in the way that we think about it.
Yeah.
Okay. So my belief is that, and even the advice I would give, if you had a company like Bank of America, Morgan Stanley, RBC, since they're in Canada, you come
Yeah.
on something like that. What I would say to them is, well, you need to control some block space. Now, you can do that by mining yourself. You can do that by pre-buying block space with an existing miner. There's a variety of different ways you can do it, but you are going to have to be a template creator, because I use RBC as an example. So if I'm Royal Bank of Canada and I'm going to the largest corporations and the high net worth people across the entire country, what I would be saying to them is, hey, you do your banking with me. I'll manage your stock portfolio. I'll manage the fiat side of your business. I'll give you loans. Maybe I offer you insurance, and I'm gonna custody some of your Bitcoin, or even I'm just gonna give you some preferred access to the network. And so if RBC happened to control 1% of the network, and I don't know if we mentioned this before, we'll round it up, there's only 150 blocks per day. There's only 4,000 transactions per block. So that means the world is served with about 600,000 transactions per day. It's not a lot when there's 8 billion people and 400 million companies.
Block space is scarce.
It is amazingly scarce, and arguably scarcer than Bitcoin itself, because block space is a one-time use thing, right?
Yep.
Bitcoin gets used over and over. If I send you some Bitcoin, obviously my UTXO is destroyed, but you have a new UTXO. So there can be this velocity, and it can get used over and over. So we have 21 million, but we can use it over and over. Well, block space, there's 150 blocks a day. There's 53,000 a year. There's 200 million transactions a year. There's very little we can do about that. And in fact, it's probably going to get smaller, not bigger, because, for instance, things like creating quantum resistant addresses requires larger transaction sizes, which will chew up more block space.
Wow.
So
if anything, it's getting more scarce.
It gets even more scarce. So if I am RBC, if I am the country of Albania, if I am Apple and I am trying to move to the Bitcoin standard, whatever, in all three of those cases, I am going to want to have control of block space. Not because, and that could be, like I said, that could be mining, or it could be pre-buying priority space with a miner. Either of those two could exist. But I'm going to do it because it's the only way I can keep my business inside some rails. I came from, when I was at Gateway, we were a Fortune 200 company. Well, I can promise you that we did not engage in any relationships for services that didn't fit within certain boundaries. We were a $10 billion company, but we knew with our operating expenses what, for including financial services, we knew how much we were going to spend every year on bank wires and ACHs, and it was a big number. But we knew a tolerance around that. Bitcoin has to provide that same thing to achieve its goal. Now, it fights, and some people don't like me, or at least don't like my idea, because they believe it fights against the individual having access, and they want,
Sure.
you know. And my response to that, by the way, is that that's why it's essential that there be individuals mining and small companies mining, so some percentage of the block space is managed more in that fashion.
I see.
But we're going to have to kind of share it. I just don't see, as a practical matter, I do not see this world in which every template and every transaction going into every template is just a free for all.
Totally. Do you think nations and institutions are thinking this way yet, or not yet, and it's too early? Because I feel like I haven't heard much of this conversation. You've been great at bringing this to light,
Yeah.
but I don't know if behind the scenes maybe there are some countries like China, Russia, already thinking this way.
Well, um, so first, yeah, there's very few. I would say, um, uh, Max Kaiser was really the first person to talk about kind of hash wars. Although I think Max was thinking about it more from the perspective of acquiring the Bitcoin, right? So
Sure.
I think most people, when they think of mining, they think about the miner making Bitcoin and wanting to be in a preferred position for that.
Totally.
And what I'm, what maybe makes me a little different, and Jason Lowry is probably the other person who I've gotten to know a little bit, but I think we're very much kindred spirits in how we think about some of this stuff. But we're probably the only three people that I can think of really in the world that really have kind of been in this vein. But what I'm saying is that instead of thinking about the mining process as the production of Bitcoin, you need to flip it in your head and say, no, mining is about the production of block space.
Sure.
And this is where it gets kind of controversial, especially in the technical community within Bitcoin. And I've been criticized by people within the core area and the core dev area for this, because I'll give them credit because they're trying very hard to like think of this like free unencumbered access for everybody. That's they're coming from that mentality. So I don't want to be critical, but what I think they've missed is that most people think of miners as economically motivated, but by the block reward. Okay. So what I'm saying is that won't be true at some point in the not too distant future.
Because yes, and you think this because, like we were saying earlier, the demand to get in blocks is going to continue to grow. So the fees are going to rise as the block subsidy continues to fall.
No. Let's unpack that a little bit.
Yeah, yeah.
So the block reward is the subsidy plus the fees. Okay. So the subsidy for those, so it's 3 1/8 right now. It gets cut in half every 2010 blocks, 210,000 blocks. We're halfway to the next halving. It is, what you're saying is true, that the block reward becomes more and more dependent on the fees. Okay, that's a true statement. However, I believe that we will reach the point when a large segment of miners doesn't care at all even about the fees. If you're RBC, your Royal Bank of Canada, you're responsible for the banking for the largest corporations in the country, the highest net worth people, and probably even some state level business. Okay.
So you're just worried about making sure your clients have
Are
access to
served.
BLOCKSPACE. Yes,
That's
I
all
see.
you care about. You
I
you,
see.
you don't care about the book. So are you economically motivated? Yes, you are. Because the success of your clients
Totally.
is what's you're motivated by. And if you don't provide this service, then um, your clients will find somebody who does, right? You will
Totally.
RBC will lose them. So are they economically motivated? Absolutely. And this is the part I think that people are missing. There are different ways than the block reward to be economically motivated.
Makes sense. Yeah, no, absolutely. Yeah, I never really thought of it like that. But yeah, if you have Bitcoin and you don't have the means to move it, especially at the institutional or nation state level, yeah, you want that block space to be able to use the Bitcoin. Otherwise, like you were saying, it's meaningless to you if you can't move it.
Yeah,
Wow.
yeah,
Oh,
yeah.
nuts.
And
Okay.
yeah, yeah.
And then, okay, cool. And then I want to just transition a little bit, I guess, here. And maybe it ties into the same thing, but I hear a lot of people talking about how Bitcoin mining is allowing for energy in places across the world where it wouldn't have made sense before, but now you can turn on energy creation in some kind, and it's profitable because these companies can mine Bitcoin and earn a profit in areas of the world where maybe before it didn't make sense to produce energy, and now those areas of the world have access to energy. How do you think that looks going forward? Do Bitcoin miners seek more of those opportunities as areas in the United States where energy is more expensive, companies that are maybe pointing hash towards AI kind of gobbles that up? I'm curious to hear what you have to
Yeah.
say about that.
Yeah. So let's divide it into on grid and off grid. So let's talk about on grid first. If we look at the electricity across the entire globe, there's a little over 30,000 terawatt hours of electricity produced on an annual basis.
Okay.
China, India, US, Canada, that's the whole world. That grows 2 to 4% annually. But demand grows about 2 to 4% annually. So we're kind of we're kind of at a certain state. Okay. Additionally, the average cost of energy is roughly 12 cents per kilowatt hour. Commercial, residential. And I do have a chart of it, but if you can imagine a bell curve around that 12-cent mark, with the cheapest energy actually being slightly negative, because there are times when on-grid energy actually gets, in certain places, they pay you to take it. I know, all the way out to people paying 60 cents per kilowatt hour on the other end, just kind of this bell curve, right? Well, everything that's cheaper than about 2 cents per kilowatt hour, if we look at these 30,000 terawatt hours produced annually, everything cheaper than 2.5 cents is not available at all times. It's inconsistent. It's energy that's available because the sun is shining and the wind is blowing in some place, and there's a massive amount of energy being produced, but nobody's demanding the energy at that point. So one of the things about electricity is it has to go somewhere, right? So traditionally what happens is it can go to batteries, it can go to pumps. Like if you have a hydroelectric facility, what they'll do is they'll have pumps. They'll take the water that came over the dam and
Okay.
push it back up above the dam, and they use the water as a battery. They'll do things like that to try to preserve and they to use the energy and also kind of conserve it in some way and use it for when the sun isn't shining and the wind's not blowing, that maybe they
Yeah.
can use it again. Okay. But that energy is difficult to find industries to use, but Bitcoin is one of the ones that can use it. And usually, like the big public miners, they, especially like those in ERCOT in Texas, they'll have arrangements where, you know, they get access to that energy. They also have curtailment arrangements on the other side that says they, if the grid is short energy and they need to get power to hospitals or nursing homes, that they'll turn off and divert the energy, and they'll get paid for that. And they might pay 4 cents on a just an average day, but they have these other situations, and that brings their overall cost of energy
Yeah.
down. This gets talked about a lot, by the way. They'll talk about grid balancing and base load and all that other stuff. It's true. However, I think it gets way oversold by
Okay.
Bitcoiners. And this is the math. I told you there's 30,000 terawatt hours of energy globally.
Yeah.
The Bitcoin network only uses 200 terawatt hours. We use
Okay.
0.6% of the world's energy. So we can't balance grids and be the offload solution and all that for too much of the world. We can
Sure.
do it
It's
on,
just too small.
yeah, I mean, if you have a massive concentration of mining like you do in Texas, then it can work. There is only, so I told you like that, so there's like sub 2.5 cents is inconsistent, basically inconsistent energy. At a commercial level, you can't mine for more than, let's say, 5.5, 6 cents. That's the absolute. If you're a commercial miner and you're paying at that more than that rate, you're not going to make it. Okay. So in what I call the mining zone, if you can imagine this, which would be that negative energy up through 6 cents, that's about 1,500 terawatt hours available for the world in the right price zone. So 6% of the world's energy is applicable to Bitcoin. We're using 200 of the 1,500. Now, the energy that sits between 2.5 cents and 6 cents is, you could think of it as under attack by AI, because it is the difference between AI and, or even just general data center stuff, and Bitcoin is you need a consistent energy source. It can't be going on and off. Curtailment and those sort of things don't work there. So, so AI is coming in, and we mentioned, you know, we're seeing Clean Spark and Riot and Iron and companies like that starting to allocate more and more of their energy there. And what I think is happening, I can't say it factually, I can say I suppose it is, those companies maybe 3 or 4 years ago invested in a certain set of mining equipment. Let's say S19 100 terahash per second class units, okay, that are now running out of gas. So they're faced with a decision. They either redeploy capital to take the energy that was driving those units, or they become a hosting provider for an AI company, which is zero capital deployment, and they can mark up the energy. So a lot of them are taking essentially that sure thing, and I understand why.
It seems like the demand's been there for them.
Yeah. And you've even seen them kind of pivot their, I mean, if I was in their shoes, I would probably do the same thing. But they're kind of de-emphasizing Bitcoin a bit. You'll see, like if you, I was listening to a Peter McCormick show the other day, and Iron's a sponsor for Peter. And I noticed in the read for the Iron sponsorship that Bitcoin, like it was really wasn't Bitcoin anymore. It was more
It
data
does feel like,
center,
yeah,
AI.
it feels like they're changing their tune for sure.
Yeah. So, and that's not a criticism. It's a
Totally.
fact. I understand it. I think it's good for Bitcoin. I think less public miners is a good thing. I kind of have touched on that a little bit.
Yeah.
Okay. So what this means is as we look at, because we're going to talk on grid and off grid, if we look at on grid, it's my belief that the 200 terawatt hours or so that we have is probably about it. That we're not going to, I mean, maybe it grows 2 to 4% as the just in tune with the overall, but there's not going to
Yeah.
be what we've seen in the past. And by the way, there are not on grid 5 years ago. I'll back up a little. If you were Iron 5 years ago, or Marathon or Riot or a company like that, it wasn't that hard to search around and find a place where there was 50 megawatts available, 100 megawatts available at a cheap price that wasn't, and that was unused. Like, that's become very rare. One, the Bitcoin miners sucked it up. And second, the AI people and data center people have sucked it
Yeah.
up. So there's just not a bunch of large swaths of power sitting unavailable. It's smaller now. 1 megawatt here, 4 megawatts here,
I
usually
see.
in rural areas. So that means that for on grid, I don't think we're going to see much new power come into Bitcoin. In fact, we may even see it go down.
Okay.
That doesn't mean hash rate goes down, though, because Moore's law is giving us more and more powerful machines. So if Iron has some S19s, maybe 70% of it went to AI, but maybe they did backfill
Yeah.
some percentage, and they took those S19s out and replaced them with S21 XPs, let's say. And so we saw with the same wattage, we saw more than double the capacity. And so we'll continue to see that. So I think, so I think that's what's happening on grid is we've kind of reached somewhat of a plateau of how much energy will be available. We'll still see hash rate on grid go up, but it's just because of Moore's law.
Sure. The efficiency of the machines are just improving.
Yeah. And that's basically it.
Yeah.
Now, the other side of that is there's energy sources all over the world that are available and sitting idle. And the beauty of Bitcoin is that it's really the only industry in the world that can go to the source. So this means, like I'll use some of, just for example, some of the projects I have.
Yeah.
I have a site in Indiana where we have a cooperative partnership with a very large commercial dairy farm. And the dairy farm, I forgot how many had 10,000, 12,000, something like that, of cattle at this dairy farm. And produces a lot of cow shit every day, right? So the farmer, the dairy farmer had an issue. Um, and he had a cost even. He had a cost of what to do with this stuff and how to dispose of it. So we were able to greatly reduce that cost by working with him to build what's called an anaerobic digester. So the cow shit now goes into an anaerobic digester. The anaerobic digester accelerates the process of producing methane from the cow shit. There is still some sludge and stuff that has to be disposed, but it's way less than if it was in its raw
Okay.
form. And we produce a couple megawatts of power, essentially for free, from the methane from the cow
Wow.
shit. Okay. So there's really nobody else that no other industries and no other company. There's other companies that could do it, but there's no other industry that could have provided that opportunity for this. Um, we own a hydroelectric facility in South Carolina. It's a facility that it was built in 1888. It ran a textile mill for over a century. It was mothballed in the year 2000. We came starting in 2021 into 2022, and we rehabilitated the hydroelectric facility.
Nice.
Um, and we mine off grid with power from the water. And we also have relationships with well owners of like stranded gas. So a natural gas well, flared gas that's part of, let's say if you're producing oil, you may have a byproduct, or you will have a byproduct of some gas, and typically that gets burned. I'm sure a lot of people have seen the
Yeah.
flare stacks. So all of these sorts of things provide opportunity, but they're really environmentally friendly too. I would be transparent. My motivation is to mine. My
Sure.
motivation is not
Yep.
environmental. I have nothing against it. I'm happy to be part of that, but it's not my driving force.
Totally.
Um, so so the interesting thing there is if we look at on grid, there's 30,000 hours, increasing 2 to 4%, with only 6% of that energy in the right price zone. And we're fighting AI and other industries for that,
Yeah.
versus off grid, where, for lack of, I mean, for all intents and purposes, there are infinite sources of this all over the world. And when you produce your own energy, typically, we're doing it, let's say, at the 3 cent per kilowatt hour or less. Now, there's more capital. And the one thing I will say is, um, it costs a lot more money
Sure.
to 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 have generators and anaerobic digesters and things like that. It's obviously a lot more expensive. So, but what for barefoot mining, as an example, we've kind of transformed from starting out. I didn't realize this at the time, in full transparency. I was a hashing company at first, and then I became a mining company by my work with Ocean, and we now create our own templates, and we do all the things that require to be a miner.
Yeah.
But now we're really the energy producer. I mean, we're really at the core of transforming energy to Bitcoin. Like
Totally.
we do the whole thing, and so that excites me. It's something I'm proud of for our company, and
Yeah, no, that's
uh,
awesome.
yeah.
And do you think more companies, I guess, going forward will be seeking those off-grid opportunities because the opportunity is there, or maybe less so because it is more, I'm sure, capital intensive and you need to set up, all the machinery and everything involved to take the energy?
I hope more do, but this is a part of but it's not. I'll say it's not easy,
Yeah,
and there are a lot of things that come into play. So first is the obvious one: it costs more money. So
yeah,
if I put up 1 megawatt on grid, it may be a third of the cost of putting up a megawatt of one where I'm the energy
I
producer.
see. I see. Makes
So
sense.
now my my operating costs are much, much cheaper. I have much bigger tax incentives. I have bigger depreciation. I also own an asset that has a lot of value. When you
Totally.
go on when you go on grid, the main investment is in the servers, okay,
I
in
see.
the
Yep.
systems themselves. And as I think you probably well know, every 3 or 4 years, those become worthless.
Yep.
So, so if you put $1 million in, let's say, in those servers, you got to get your money out in 3 to 4 years.
Yep.
When you are the energy producer, and by the way, you usually have to buy the top of the stack. Okay, you're buying S21 Pros. Um, uh, you're investing at the very highest, but you still end up at zero 3 to 4 years later.
Yeah.
Okay. When you invest off grid, the majority of the money is going into energy production, into the generators. Well, properly taken care of, those don't trend to zero over 4 years. 4 years later, they've lost some value, but they've maybe lost 30 to 40% of their value. And even 20 years later, properly taken care of, they're still valuable.
Yeah. Yeah. Yeah.
So, so you have to have a different optics. It's also very hard, and it's a completely different skill set that we have had to acquire.
Totally. You've learned over years.
Yeah, and we've got some guys on our team that now know about generators and processing gas and like these
I can't
sorts of
imagine
things.
how much goes into stuff like that. Yeah.
Yeah. So that's a barrier to entry. And the third barrier to entry is an interesting one. It's that these opportunities relative to what the public companies do are all small. So like, our sites typically are going to be 1 to 5 megawatts, maybe 10. Like that would be a big off grid, or I call them horse class. And just real sidelight. So I believe there's kind of three classes of mining in general. There's rabbit class stuff, which would be individuals running a system in their garage. Maybe there's a BitX for those that can see. If you
Nice.
have a BitX, you're a rabbit. The elephants are the big sites, the 50 megawatt site, but they're big and powerful, but they're easy to identify. And so right now people aren't real worried about this because we have a friendly administration in the US. But if there was to be a regulatory attack, it's pretty obvious who to attack first. The elephants are
Totally. Yeah. Yeah. Makes
sitting
sense.
there.
Yeah. Wow.
And by the way, the great thing about the rabbits is you might hunt a few rabbits. You can never kill all the rabbits, but you could kill all the elephants.
Yeah.
The horses sit in the middle. It's where I specialize, which is, we're trying to build sites that are largely mobile because they're in that size 1 to 5 megawatts typically. We can build them quickly and we can move quickly. We're typically somewhat off the radar too. For
Yeah.
instance, our
No.
hydroelectric, our hydroelectric facility, even though it operates, my guess is that there's probably a couple hundred people in the world that I shouldn't say that now because I've been on podcasts, but well, I should actually, even then, most people don't know where it is. It's in South Carolina, but that's so there's probably a couple hundred people that know exactly where that site is. That's it,
Yeah.
right? So
Okay.
and I've got other sites, some really small ones that are they're more like a Shetland pony, where they're
Yep.
like 100 kilowatt site running on natural gas. Nobody knows they're there. No, I
Yeah.
mean,
No one would know. Totally.
yeah, nobody knows they're there. So, but what I was getting at was the big guys. So if you're Iron, you're Riot, you're Marathon, and you go and you're examining, hey, I have an opportunity for a 3 megawatt site at 2.5 cents per kilowatt hour. Maybe it's a $3 or $4 million project. Okay. they will look at that and say, well, you know, let's say it adds 120 petahashes to their, they'll go like, it doesn't move the needle. It's
Yeah,
not
it
worth
doesn't
my
make sense
time.
for them. Sure.
So you have to build an organization that says that that's what we're going to do and we're going to get good at this. And ideally you stack some together. So you get some ability to concentrate your resources and your efforts into some geographic areas. It may be, let's say, like we operate in Western Pennsylvania, and we've got 3 wells that we mine off of three natural gas wells, and they're all within 40 minutes of each other. So
Okay. Yeah.
we can use somewhat similar resources to manage 3 sites instead of one.
Makes sense.
But
Yeah, no,
it's
that sounded awesome. I think, off grid, what at the time I'm sure was niche opportunity that you guys been able to explore and take advantage of. And it's just cool to see because I think that off grid opportunity, I think I'd like to see it continue to grow. And I think you guys are leading the way. So it's just cool to see it play out and what types of ways you guys are able to produce energy is mind blowing.
yeah, we're trying. We got a few new interesting ones that we're working on. Um, but yeah, well and that's it's what's driving us. But I mining is a strange business because I I don't necessarily look at any other mining company as a competitor, right? Because we're not fighting for customers,
Yeah,
right? I mean, if another mining company expands, global hash rate does grow, but it doesn't honestly affect me that much. And it especially people doing the sort of thing we're doing, I think really are building strength in the network. So I applaud them.
absolutely.
But there aren't a lot of us doing what we are
Yeah.
doing in the off-grid world. And I mean, God bless anybody that's out there making an effort um, to build out the network. Uh, and I don't wish ill upon anybody. Um, but if you're, you know, especially if you're somebody that's willing to really be a miner, like and like I said, build your own templates and help fight the censorship, disperse the hash rate, make us more immune to attack. Because I think one of the things too, I'll say, obviously the U.S. is the center of mining today. By the way, Canada should be, but
We really should. Yeah.
you know, um, but it's just too difficult. I've looked at several opportunities there and never been able to kind of figure out how to get through the morass of the bureaucracy, and I don't want to go to a place where I'm not welcome.
Yeah, we rather keep
So
our energy in the ground over here, not utilize much of it.
yeah. I mean, we probably don't have to go do a whole Canadian
No.
politics thing, but it's it's I mean, but even in the U.S., one of the things I've said to some of my brethren in Texas, and there are a lot of mining companies in Texas, and they're completely focused on Texas. I somewhat understand why, because there is a lot of energy in Texas.
Yep.
That said, one of the things I've told some of the other folks that I work with, executives and people investing there, is said, are you sure you want to be all in Texas? Are you sure you want to be all in on grid, for instance? Because I'll say this, imagine 3 years from today that in the US we're swearing in AOC as the president, that she names Elizabeth Warren the Secretary of Energy, and Beto O'Rourke, who is a Democrat, becomes the governor of Texas.
Yeah, that
How,
can change things fast.
yeah. And I'm not predicting that, but what I say is there's a non-zero chance that occurs. Is that a 5% chance, a 7%?
Sure.
There's some chance. And so, do you really want to bet everything on a strategy that can be probably turned off almost overnight if the stars align against you?
Yeah.
Um, so, I, like I said, I don't think that will happen, um, but but it could. And if it didn't happen that cycle, there probably will be a cycle. And so I think there's a race, right? The Bitcoin has some major detractors, still have them. Like say Elizabeth Warren, for
Yep.
instance, continues to be a detractor. I think there's a race, probably over the next decade, for Bitcoin to become so ubiquitous and its tentacles to be so interwoven within the system that politically fighting it becomes impossible.
Yeah. Political suicide at some point, maybe.
Yeah, but I don't think we're there yet. And and by the way, like and Canada's an example, by the way, right?
Yeah.
So
No,
Canada's
absolutely.
an example where I don't think I don't think Carney and his crew would not lose any political power by coming out against Bitcoin, right? Now it might send the Alberta folks even further into secession, uh,
Yeah.
but because it's
Totally.
funny. Go ahead.
Sorry, go ahead.
No, I mean Alberta is such a great place,
It is.
especially as a miner. And it's absolutely pathetic that the people there are not able to benefit from
It's
the
crazy.
phenomenal resources they have. Yeah.
I think BC is actually not allowing certain amount of energy to be put towards data centers and AI. So they're capping what can be used and where the energy can go, which I don't like
Yeah.
to see. Bob, I want to
Yeah.
respect your time here, and I want to ask one more quick question.
Yeah, sure.
I feel like everyone's been seeing this in the media the last couple of weeks, maybe. So Elon has been doing the rounds on podcasts, talking about abundance and humanoids going to the Mars, everything Elon does.
Yeah.
But what he said was interesting. I think it was on the Moonshots podcast. He was saying that the real currency is energy. Now, I
Yeah.
thought that was an interesting analogy, and I like that analogy. Do you think Bitcoin is energy and almost like Bitcoin is a battery for energy? Do you like that framing of when you're thinking of Bitcoin or not so much? What are your thoughts on that there?
Well, I've become an energy producer myself, in large part because I believe that to be true. That for me to truly control my destiny, I have to control the energy. Now, um, it's probably a little more complicated than that, but because of the things like block space, like
Totally.
you know, I'll throw that caveat, but we spent enough time on that earlier. So, so fundamentally, I agree with it. You probably know there are people like Henry Ford, um, uh, Bucky Fuller. If you've never read the work of Bucky Fuller, um, he was a great visionary back in the middle part of the 19th century, 20th century, excuse me. He had the same concept, and Elon is saying that it is the ultimate currency, I think, and it's the only one I think that we can properly value. If it, I'm sure you've seen the charts, but the prosperity of humanity is directly tied to energy. People
Totally.
with people with more access to energy live a better life. And so it's not people with more gold live a better life. It's not people with more silver or more beads or more shells, right? I mean, all these different things have been used as money in the past. It's people that have more energy. So it's only logical that ultimately we would settle on energy being the appropriate currency. And I think Bitcoin does the best job ever of representing energy.
I totally agree. Totally agree. Cool. Bob, I really appreciate this. I want to thank you for taking the time to do this. I really enjoyed the conversation. For anyone, I guess, in my generation, Gen Z listening, I think there is this generational, I don't know if it's hate or angst towards boomers, which I don't think should be there. I think the money system is completely
Yeah.
broken, and that has led us to where we are today, this gap between assets and
Yeah.
incomes. And I don't think that has anything to do with a particular group of people, or maybe it does in the Fed, but not boomers themselves. So I think I like to kind of frame it in my head as boomers had the opportunity to buy houses for under $100,000, and that has done well for them. And now I think, everyone, but specifically Gen Z, has the opportunity to buy Bitcoin for under $100,000, and I think that opportunity might even be greater.
I completely agree, Aiden, and I fight this a lot as a boomer. One of the things that bothers me, to be honest, is when younger generations direct venom to my generation.
Yeah,
And I think it is, we can do a whole show on this, but
I
I
totally.
I'll just throw a couple things at you because I know we're trying to close,
Yeah, yeah, yeah. No, no, I'd love to
but
hear it.
first, the fundamental issues are with the people that created the Fed, the people that created income tax, the inability to identify, especially in the U.S. and probably Canada, to the Triffin dilemma,
Yep,
um, Nixon's removal of the gold standard. Like these are the fundamental things that cause the situation that younger generations are in. And I'm sympathetic to
totally.
it. But it wasn't, first of all, it wasn't the boomers. It was
No,
specific people, most of whom were not boomers. These were from even generations before. That's one thing. Second thing, boomers, you may think of them as a generation that did well. They actually didn't do as well as you think they did. Do you know the average net worth of a boomer in the United States, Aiden?
I do not know.
It's $400,000.
Wow. Okay, no, I would have thought it would have been greater than 400,000. Wow.
Yeah, median. That's the median. That's the median. So
Okay.
50% of the people who are boomers have $400,000 or less of net worth.
Wow, that is surprising. I would have thought it was going to be greater.
Yeah. Yeah. Now the average, because obviously, um, actually Warren Buffett's not a boomer. I'm trying to think of another wealthy boomer, but
Sure.
whatever. Um, 'Cause he's I guess he would be the greatest generation, I guess.
Yeah.
Um, anyway, the average is about 1.2 million. It's still not even that.
Yeah, no. Yeah.
It's not like all the boomers have this ungodly level of wealth. And what you might not realize is that and I'm a young boomer, by the way, but this is what we face. We faced super inflation in the 70s. And you can look these up. We faced a big crash in the market in 87. We faced the dot-com bust in 2002 and
Yeah.
2003, and the great financial crisis of 2008 and 2009. All of those were resets. So as a young man trying to build wealth, I did okay. I'm not complaining, but I had four resets in my life,
Totally.
and so we
You guys
didn't
have
do
seen
as
a
well as you
lot.
think we did, you know.
Yeah.
And so one, we weren't the problem. Two, we suffered from the problem, and we really don't have what I think people think we have.
Yeah.
And
Totally.
so yeah, so like I said, and by the way, when you direct your venom and your angst at the wrong people, you just helped the people who are causing the problem. You just gave them a pass.
Totally.
So, and that's really dangerous, right? And even when we see, I mean, and I think that that's a big problem with society, where when you see riots and protests and all these things, whether they're against Trump or they were against Biden or whatever, I'm not taking a political side in this show. They're missing the point. Like, the thing that caused whatever grief these people are protesting against probably had nothing to do with any of those politicians, right? It
Totally
had to do
agree.
with a broken monetary system.
Absolutely. And yeah, you're right. I don't think enough people realize that. But I'm glad you're out there, and many Bitcoiners are out there spreading this word.
Yeah.
So the younger people can realize what's happening. And another thing I think just quickly is that the younger generation, like my generation, Gen Z, they really just don't go out and vote. A lot of the voting base comes from older generations, and Gen Z, might want a change, but unless you go out and vote, which again might not make a change at all because the money system's broken. But if you're not voting either, yeah, you can't expect much of a change.
Yeah, it's funny, Mitch. I think it was over the weekend, I got into something where this very topic,
Okay.
and I posted that very thing, which was this was U.S. presidential elections going back to 1960, and what it shows is that the 18 to 24-year-old band, which would be your band, but all the way back to 1960, has
Yep.
never voted more than 50%. Like, that's the
Wow,
most
that
the
low.
voter turnout has ever. But the older groups, which are like, let's say, the 60 plus groups, they're all at like 70 some percent.
Yeah, much higher.
So, the young people, if they want to have a voice, it's there. You're not
Just
doing
gotta
it.
go use
But
it.
but but interestingly, the boomers did the same thing. We didn't
Yeah,
vote when
yeah,
we were
yeah.
young either, right? And by the way, I don't think it would make a hill of beans a difference, but
I agree.
because of unless there were candidates, the exception would be Ron Paul, that he was the only guy in my lifetime that, at least as a presidential candidate, I think had a message to fix fundamental monetary issues.
Yeah.
No, other people would say, "Oh, I want to have a balanced budget," or shit like that. But it was just fodder. It wasn't. It wasn't
Well, we
real
saw how
stuff.
that went already with Elon and Doge already this time around.
Yeah, yeah. So
Cool. Okay, Bob, thank you. I
yeah,
really appreciate it. There's so much I like talking about, and you can go down rabbit holes so well on all these topics. So we might have to do this again at some point in the future.
sure.
Thank
Happy to
you.
come back.
Awesome. Thank you, Bob.
Thank you.